We're here to talk about the direction of Bitcoin and the rest of the crypto market with Greg King. He is the CEO and founder of Osprey Funds. Greg, welcome back to the show.
It's great to be here again, David.
You have several funds, a Bitcoin fund, and you're creating an ETF soon. Let's hold the audience in suspense for just a minute. We'll talk about that because I've been waiting for a crypto ETF for forever, but hasn't hit this side of the pond yet. Now, I'm looking at the Bitcoin price, $44,000. Significant run up since its lows earlier in the month, last month as well. I've been reading media. A bunch of articles are bullish on Bitcoin. Where do you stand?
So we've been bullish for a long time. Obviously, building a business in the crypto space, we're believers in Bitcoin and all that technology. I think the last few months have been challenging for people. Bitcoin was locked in a range from basically 30,000 to 40,000, which is kind of unusual for Bitcoin. It moves around, but people are used to it moving either up or down, not sideways. But we do see a breakout. If you examine the technicals. It looks like once it's broken out of this $40,000 upper limit, seems to me that will probably be the base of support going forward. And so we think it's emerged from that kind of channel. But again, our focus is more long term. We're not sort of market prognosticators. What we think is that crypto, led by Bitcoin, but also more so altcoins as things move forward, is here to stay, because at the end of the day, this is really technology. It's new technology, and it's riding a wave towards decentralized movements. And I think that's just in the popular culture at this point and not going away.
We've spoken last time, and you mentioned that Bitcoin's historic price cycles usually end with a 900% appreciation. Is this cycle any different?
Yeah, I mean, we have, I think, three major moves to draw from there. So that is the average in these bull runs after a period of consolidation. I think, if memory serves, the minimum was 400%, and then there was one around 1,700% in terms of those bull runs over periods of a year or two. I wouldn't see this necessarily as any different. So if you measure from the last all-time high, that was in place for more than 100 days of roughly 20,000. 900% move puts us at 200,000, but a 400% move, puts it basically at 100,000. So, again, we don't make price calls, but I don't see those numbers as being unattainable in this bull run at all.
What could challenge Bitcoin right now? What could take its place as the biggest cryptocurrency in the world, or perhaps draw money out of Bitcoin wallets around the world?
Yeah, well, that's a really interesting question with a lot of answers. I think that Ethereum's always talked about, and as the number two, it should be. And whether or not it passes Bitcoin in terms of total market cap is still up for debate. I mean, I do think that that's possible. However, Ethereum won't replace Bitcoin. Ethereum's a totally different product. It's not been designed the same way as Bitcoin has to perform the same function that Bitcoin is. And so you have fundamental differences. Bitcoin is a finite supply. Ethereum doesn't. Ethereum is transferring to proof of stake type of methodology, whereas Bitcoin's staying proof of work. So they're really two different things. And we believe that Bitcoin is establishing itself as a digital alternative to gold, a reserve asset. It's got a lot of volatility, and that needs to smooth out over time, but it will do so. We believe as Bitcoin just becomes larger and larger and more accepted by institutional investors. Ethereum, though, is a really unique situation because they essentially have, I don't want to say a lock, but certainly the first mover advantage on the whole DeFi movement. And that infrastructure is being built largely on Ethereum, although there are other platforms like Algorand, Solana, and some others that people are looking at. But that's what's driving Ethereum at the moment. So that could continue quite a bit.
And just briefly, are you concerned about Ethereum or DeFi security risks at all? Just this week, $600 million of DeFi was hacked. As an investor, would you not look at a headline like that and think to yourself, maybe I should park my money in somewhere that's less prone to be hacked?
So this is a beautiful question. So one of the reasons we do what we do is to provide an extra layer of comfort to investors, right? I mean, we're creating funds that essentially just hold a cryptocurrency. We have the Bitcoin fund, OBTC is the ticker. Then we have a Polkadot fund and an Algorand fund, but they just hold one coin. And sometimes we get asked, like, why would you ever do that? Like, who needs that?
Yes.
But the reality is that if you're custodying your own coins and tokens, you do have to take a little bit of extra care, and you do have to worry about where they're held and things along those lines. Now, that doesn't obviously curtail every risk that can exist around these products, but it does kind of help, Joe investor who maybe doesn't want to bother with all that hassle to kind of know that their assets are held in a fund. It's custodied with a reputable third party like Coinbase or Fidelity or some of the other players, and they don't really need to worry about misplacing keys and things like that. So that hack was obviously a problem, and I find it even more interesting. The guys returning the money now.
They've only returned half of it, so.
Right.
The other half is yet to be located. They claim they're only doing it for fun, quote unquote. So someone's having a laugh. Probably not the people at Poly, but somebody else. Greg, let's talk about this ETF that you're thinking about launching. Could you talk about it?
Well, I can speak to it generically. So we have our Bitcoin fund, OBTC. Our intention has been to convert that to an ETF. We're still proceeding down that path. Nothing official has been filed, but I can just state that that's our intention right now. But I think we and the market, everybody got a little more color recently from Gary Gensler when he appeared before the Aspen Institute or whatever it was, and spoke about the SEC stance, not just on Bitcoin ETFs, but a whole host of issues. And if you kind of read and parse through his comments pretty carefully, it does seem like there's a path forward. I stick to what I said earlier this year, that we're not going to see it happen in 2021. I think that 2022 is probably the earliest we see any kind of Bitcoin ETF. But it does seem like there might be some light at the end of the tunnel. However, he seems to prefer futures-based ETFs, which makes some sense. We filed a futures-based ETF in 2017, which back then was way too early. We have not refiled it, but the reason regulators might prefer that is because a futures contract is a regulated instrument. There's a lot more oversight there versus the actual physical Bitcoin. It's not as pure of a play for investors, but you do have analogs in the ETF world. For example, the biggest gold ETF holds physical bars of gold, but the biggest oil ETF does not. It does not hold barrels of oil. It simply rolls oil futures contracts. And of course, that can be problematic, as it was in early 2020 when oil futures went to negative $37 for a minute there. So, those types of issues would have to be thought through with respect to Bitcoin.
Yeah.
Kind of curious how Bitcoin would ever go negative. Oil is different because there's physical demands and storage costs and things. But there does seem to be light at the end of the tunnel for a Bitcoin ETF through the Gensler administration, although it definitely needs to be his way, or it's probably going to be the highway. Okay,
so just to clarify, your ETF is a Bitcoin ETF, or is it an ETF comprised of several different tokens?
So we have, it's not strictly speaking an ETF. Nobody has an ETF in the US. We have a Bitcoin fund that just holds Bitcoin.
I'm talking about your future plans for an ETF. You don't have to go into the specifics, but yeah.
Well, that I can't tell you, but we are the existing ETF, if converted to an ETF, or the existing fund, if converted to an ETF, would hold the physical. We're considering other options that may involve futures, but we haven't filed anything there yet, so I can't really comment.
How much of the altcoin market is regulated right now? Do you know? Are they all just unregulated securities just floating around the wild, wild west?
Yeah, so that is one of the major questions, and part of what Gensler was talking about is, how many of these things are securities? You literally have thousands of crypto coins and tokens that are out there, and at this point can be created pretty easily by people who know what they're doing. And so the question is, how do you make a determination? Do you, as the SEC, just simply deem thousands of these things securities all in one fell swoop, or do you go line item by line item, analyzing each coin and token and its characteristics, how it was created and
They can never
distributed,
keep
et
up.
cetera. You
You're
can
gonna,
never keep up, right? But if you paint with a broad brush too, now all of a sudden, exchanges and even individuals are in violation of all kinds of securities laws, right? And so you would need to grandfather them in, and you need to say, okay, you need to comply as of a date in the future, but then you need to enable them to comply. So some of these second and third order effects are being talked about by the industry, internally and behind the scenes, because if Gensler were to come out and require large players in the space to register, let's say, as securities exchanges, well, then all the other agencies would need to allow them to do that.
yes.
Because that's not even clear that those moves would be allowed. So there's quite a bit of coordination that would need to happen, amongst regulators, not just the SEC, but other agencies as well. It's a very big issue, and unfortunately, they've allowed it to evolve to this point before really getting serious about it.
Speaking of regulations, Greg, what do you think about the infrastructure bill, specifically as it relates to cryptocurrencies? There was a clause in there that states that crypto brokers, quote unquote, need to provide information on their clients to the IRS. The controversy here is that it's unclear who the brokers may be. They could be dealers, they could be financial institutions, they could even be miners, technically speaking. Maybe that could apply to you as well, since you're a fund manager of cryptocurrencies. What do you think?
Yeah, look, I think that that bill, that language was hastily drafted. I think some of those amendments need to be considered and implemented, specifically the Lummis and Toomey amendment.
I believe that was blocked, right? That amendment was blocked.
Yeah, there was some procedural block by senators who shall remain nameless for trying to raise more money for more military spending or something. But here's what I think is, I'm hopeful that 2,500 or 2,700 page bill, which was tried to, ramrod through, the longer it doesn't get passed by the House, the more holes will get poked in it, because people will actually have time to read the thing. And so it may kind of fizzle and need to get redone. And at that point, I think cooler heads will prevail, because there was a bilateral consensus on some of these crypto amendments, right? You had Republicans and Democrats agreeing that, hey, wait, this is nonsense. So, I'm not too overly concerned, because I guess, have a little faith that it won't get passed in its current form through the House. But stranger things have happened, and if it did get passed and enforced in the broadest sense possible, that would be very damaging to the industry.
Right. Well, let's talk about that worst case scenario. Despite the low likelihood, what could happen to the industry? What would need to what changes would need to take place effective immediately?
I think we've had some calls with some experts on this, and the changes are so broad-reaching that it's impossible for me to answer in a soundbite. What I will say is, as an asset manager, I don't think we're in the crosshairs. I think there are other more concerning things happening in crypto, whether it's new coins and tokens being sold to retail investors as unregistered securities, or whether exchanges are operating outside of exchange rules, or whether some of the lending platforms and DeFi platforms are operating without the proper investor protections. So I think the asset managers are probably the least of the concerns. However, we would have to take a careful look at the language and how it might apply to our business. So we're doing that now, but hopeful that it will be changed.
Are you concerned about the potential? Well, we saw what China did to its miners. It basically banned them, and that they had to move out. And we saw an immediate drop in the hash rate that more or less correlated with the drop in the price. Could something similar happen in the West, for example, if the United States said, look, you guys aren't allowed to mine here? Is that a possible risk to you, or do you think the administration is just completely different from that of China's in their attitude?
Yeah, I think generally we're going to take a more cautious approach than what China has done, and I don't see that on the horizon in particular from the United States. But my view on the China situation was that's a long-term good thing. You don't want too much of the mining production capacity being concentrated in a jurisdiction like China. So that is probably helpful mid to long term. I really don't see that happening in the U.S.
Okay, and
they'll just find a way to tax it instead. That would probably be the U.S. approach
with the infrastructure bill. Okay, I'm surprised it was even. When I first read the headline, I thought to myself, what does the infrastructure bill have anything to do with cryptos? Why is that even in there? I don't know. Maybe they're.
You're probably not old enough to remember the Bridge to Nowhere, but
I do remember that. That was Sarah Palin.
These things happen. Yeah.
Maybe they're trying to raise more taxes to finance the infrastructure bill. That's maybe what they're looking for, ways to find more money. I'm curious. Finally, I'm curious to know how you pick coins to manage. You've decided on a Bitcoin fund. You mentioned you're in Polkadot as well. What are the criteria, broadly speaking, for deciding? Look, I want to manage this coin. Why not Litecoin? Why not Cardano?
Don't forget Dogecoin.
Thousands of coins. Yeah, Dogecoin. Yeah. Shiba Inu. Dogecoin's old history. We're now talking about Shiba Inu. But anyway.
Right. So what we do is we're trying to take a systematic approach and identify layer one coins that we think are going to be promising. And so when I say layer one, that means coins that are involved with building the infrastructure of the blockchain ecosystem going forward. Ethereum would be a great example of that. We don't have an Ethereum project for other reasons yet, but Polkadot and Algorand are two potential backbones for some of the crypto projects that are getting built out. I could go into some of the benefits of each of those, but folks can go to our website if they want to check that out. But we're trying to pick what we think are going to be some of the backbones of the ecosystem as we build out, and then move down into layer 2 and 3 types of protocols. So we want to do that, and we also want to be first to market. We do have some competitors in the space, so we're looking for opportunities that have not been brought to market. And we do plan, a much broader offering of index-based products and active-based products sometime soon. So we'd love to come back and talk about that when we can.
Absolutely. We'll follow up then. Thank you so much for coming on the show today and updating us on the crypto markets. Thank you.
Thank you.
Thank you for watching Kitco News. I'm David Lin. Stay tuned for more.